Imagine you just closed a $10,000 deal. Your team is pumped and you're celebrating, and your client hits the pay button on that invoice that you sent them. But when that money lands in your bank account, it's not $10,000, it's $9,700. And no, you're not going crazy. You paid $300 just to accept that client's credit card. Repeat that 10 times in a month, and you've paid $3,000 just for the privilege of getting paid. Now, if this hits close to home, then this video is for you. Because if your business has large invoices, then you need a way to move those large sums of money without paying that credit card tax. And so today, we're gonna talk about another way to get paid: ACH payments. Why? Because they cost way less. To understand what I mean here, we have to look at how money actually moves from one bank to another. So if credit cards are the high-speed bullet trains of the payments world, well then the alternative to them would be the low-cost freight trains. In the US, these are called ACH payments. This stands for Automated Clearinghouse Payments. Now in Canada, we have a unique term for these. They're called EFTs, also known as electronic funds transfers. Different names, but the same idea. These are direct bank-to-bank transfers. Quick history lesson. Back in the 1970s, they used to move truckloads of paper checks from one bank to another. The ACH system was devised as a way to cut down on the operational costs of such a venture. So instead of moving tons of physical paper, they started moving payments stored on analog storage devices like floppy disks. Remember those? But fast forward to 2026, and this is all done digitally now. And it's a good thing too, because just last year, over 35 billion ACH payments were processed in the US. That's a total of over $93 trillion. Holy crap. Now the secret behind why ACH is a cheaper processing method is in the word batching. You see, credit card payments, they're authorized in real time, which makes them expensive. Whereas ACH payments, this is where thousands of transactions are bundled together and settled at once. Since this process is highly structured and automated, it only costs you, the business owner, a fraction of a percent to process. And so here's the hypothesis. If you own a business like a healthcare clinic, a law firm, or a contracting company, and have high invoice amounts, well, you might actually be overpaying for speed that you don't need. I'll explain why in just a second here. But first, understanding something like ACH isn't a luxury. It's an essential part of running a business in this day and age. This is why we put together a specific guide to navigating ACH payments just for you. It's a super practical breakdown that includes things like a checklist for getting started, email templates to contact your customers with, and so much more. And so if you're interested, I've left a link to this free resource in the description below. So here's why you might be overpaying by accepting too many credit cards. Let's look at the math on a single invoice for $5,000. That's a pretty common amount for many professional services. If a credit card is used, then you might be paying the market flat rate of 2.9% on that transaction. If so, you're losing $145 just in credit card fees. Now in comparison, if we look at how a company like Helcim charges for ACH payments, the difference is stark. So our standard rate is 0.5% plus 25 cents per transaction. This is for any amount under $25,000. Now the key thing here is there's actually a cap on the amount of fees that can be accrued on an ACH payment. For us, that's $6. So what does this mean? Well, on that $5,000 invoice, you'd be only paying $6 in fees. Doing the subtraction there, that's $139 less than what you'd be paying with credit card. Let's say you run a healthcare clinic and you're processing $50,000 a month in these types of invoices. Well, then the difference is stark, because instead of paying $1,450 in fees, you'd be paying roughly $350 in fees. Over the course of a year, that's over $13,000 back into your business. So now it would seem like you have a choice. Are you going to continue accepting credit cards or move over to ACH? Well, the good news is you don't have to make this a final decision all at once. Here's a 3-month experiment that you can run to test whether ACH works for your business. Start by picking your top 5 recurring clients with the biggest invoices. Then offer them an incentive to switch their payments over to ACH. Then incorporate the ACH authorization form, or PAD agreement if you're in Canada, into your client onboarding flow. This way your clients are given a clear choice right at the beginning between paying credit card and paying ACH. After you've done this, wait 3 months and then put your latest processing statement at the end of those 3 months in comparison with a statement prior to this experiment. Calculate how much you saved. By doing things this way, you're not switching your business overnight. You're just starting where the fees hurt the most. And that might be enough to give you some evidence of whether this is gonna work for you or not. At the end of the day, we just wanna keep more of the money that we make in our bank accounts. And ACH payments might be the way to do that. Now, if you wanna learn about other ways you could try and save on processing fees, check out this video up next. Otherwise, this was Victor from Helcim, and I'll see you next time.